You've always been told that you need to go to a bank in order to acquire a mortgage. But what if I told you that you can buy a property without the bank? I purchased a fourplex in Las Vegas in December of 2018 without using a bank and without using a traditional mortgage. I purchased the property $40,000 below market value, which means on the day of closing when I actually bought the property, I actually had an additional $40,000 of equity. Before I tell you how to do it, let's quickly go over the typical way of buying a house. So you walk into the bank or you contact a traditional mortgage lender and they're going to look you in the eye and say, hey, in order to get pre-approved, I'm going to need to see some documentation. What you're going to need to show are last 2 W-2 pay stubs, 2 years of tax returns, possibly some bank statements. They're going to run your credit. You're going to have to share with them all of your monthly debts and all of your monthly incomes in order to calculate your DTI. You're going to need a photo ID, previous renting history, possible references to previous landlords, and make sure that you haven't had a foreclosure on your credit history in the previous few years, I think as upwards of 7. All right, wonderful. So you just went through this long, exhausting pre-approval process. What's next? Well, you can get approved, but what if you don't get approved? What if you don't qualify for your dream home? Keep in mind that this doesn't necessarily mean that you can't afford it. There are many different scenarios where you might not be able to afford a house today when you want it, but you can actually afford the monthly payments. You could have non-regular employment. This is 1099s, contractors, people that receive payments regularly but not consistent enough for the bank. A bank may not want to loan you a mortgage if you don't have a W-2. Or maybe you just had a foreclosure during a recent tough time 3 or 4 years ago. Now that you have a great career, an established work history, but they still don't want to loan to you because of that foreclosure. If none of those apply to you, maybe you just don't have the down payment today. There are a lot of markets right now in this country where people are going to buy homes that they can't afford. Now, it can mean many things. Maybe you just don't have the down payment. Now, if you don't have the down payment, that likely means you can't afford it, but there are plenty of scenarios where you absolutely can afford it. You can afford the monthly payments. You just don't have quite enough for the down payment, and maybe you need another 2 or 3 months, but your dream home is available today. In some of these coastal cities, think about it, you might need 70 to 100 grand for the down payment, which, of course, I'm of the mindset that you should probably have the down payment in order to fully qualify for the home, but maybe you and your spouse can easily afford the monthly payments because you have great careers amongst you two. But the down payment, you just don't have enough cash available today, and you may have it in 3 or 4 months, but a house becomes available and you want it today. If you listen to your parents or if you listen to your coworkers, they're going to tell you that you can't afford it or that you have to follow all these rules, the bank's rules, in order to qualify for a house. But what I'm telling you here is that you can actually play by a different set of rules. Now, because you follow this channel, you're going to become aware of different ways of playing the game. And what I'm leading to is creative financing. I'm going to give you 2 examples today, seller carry and lease purchase. A seller carry is an option when an owner owns a property free and clear. That means they have no mortgage. They own the property 100%. And what a seller carry can allow is it can turn the owner into the bank itself. And essentially your qualification is your ability to sell yourself to that owner. We just went through all of the documentation and the pre-approval process that you have to go through for a traditional mortgage, but here in this case, it might only need a couple phone calls to prove to yourself that you're a qualified borrower to this owner. Best of all, and one thing I love, is that you get to set the terms. You're only limited by your creativity. One little bonus tip, if the owner is distressed in any way and they want to get out of this property, they don't have a mortgage, so they aren't necessarily in financial distress, but maybe they are in some other ways. Maybe the property needs a little work, or maybe some of the tenants that are already there are proving to be a headache and they want to get out. Well, that's where you can come in and offer some type of seller carry terms, and you can get some generous terms for you where you'll be able to qualify for this type of financing. And here comes the answer for this video. How did I purchase a fourplex without a bank? Now, I was able to talk to a homeowner here in Las Vegas. He actually lived in New York, but he owned this fourplex here in Las Vegas, like 3,000 miles away, long distance, right? Well, he was distressed and he was tired of dealing with tenants. He was tired of trying to find a property manager for the place. He was tired of putting a lot of money into the property to fix it up. And thankfully for me, he actually put a lot of money into it. So the property was fully ready for 4 tenants when I took it over, but he owned the property free and clear. When I heard that, that was like a magic buzzword. I instantly thought, oh, this is my opportunity, because at the time I only had something like $23,000. So I was able to offer him terms based on my ability to be a borrower. I only had $23,000, so I knew that I could offer $20,000 as a down payment max. Now, I wanted the property and I was willing to overpay a little bit, But at the time of purchase, I purchased it for $260,000. And guess what it was worth? It was worth almost $310,000 when I bought it. I conservatively estimated at $300,000. So when I purchased, I had $40,000 of instant equity in the property. So with my $20,000 down payment, when I bought the property, I owed $240,000 to the owner, the previous owner, and it was worth about $300,000. So I instantly had $60,000 of equity in the property. And because we did a seller carry, that meant that the previous owner acted as the bank. Now, I didn't have to deal with any documentation or pre-approval or running my credit. Simply, he trusted me because he watched some of my YouTube videos. I had talked to him on the phone for months. I talked to his wife. I don't want to use the word convinced as if it wasn't a win-win scenario, because it absolutely was. I helped him out in a lot of ways. But in a way, I taught him the benefits of seller financing, and he believed in me enough to be a qualified borrower. So what I offered to him was the $260,000 purchase, $20,000 down. I was going to pay for all lawyer fees and closing costs. It was going to be a loan that was amortized over 30 years. So my monthly payment was at 6.5% interest. So the total was $1,516 a month that I'd pay to him. And we used a third-party escrow so that my property manager was able to pay the escrow company, who then sent the money to him. So I was really hands off, and I could trust that these people would make the payments for me. I didn't have to deal with a thing. I did not spend 1 minute on it. But anyway, so this owner was able to receive $1,500 every single month from me. $240,000 mortgage, amortized over 30 years, 6.5% interest, $1,500 a month. Win-win for both sides. I also mentioned lease purchase. Now, I'm not going to cover lease purchase in detail in this video. I'll cover it in detail in a future video titled How I Bought the Best House Hack in America. Make sure to hit subscribe because you are not going to want to miss that video. I'm going to help share with you how you can add a lot of money to your monthly income by purchasing a property. A lease purchase is a much easier strategy and much better tool to have in your pocket than a seller carry. Now, a seller carry is limited to people who own their properties free and clear, but a lease purchase can happen even if someone has a mortgage on their property. So this opens up the door for opportunities for you to a lot more properties. Thank you so much for watching this video. I really hope you got something of value. It was a little bit shorter today, but make sure to go ahead and leave a comment if you have any questions. I'd be more than happy to answer it. And make sure to hit subscribe so that you can catch my future videos on how I'm going to go from zero to financially independent, and I'm going to be sharing the journey with you.